On March 18th, Israeli airstrikes hit Iran's South Pars, which is the largest gas field. In retaliation, Iran launched missiles and drone strikes on Qatar's Ras Laffan, world's largest LNG hub, wiping out 17% of its capacity. Iran also targeted energy sites in Saudi Arabia and UAE, while the blockade in the Strait of Hormuz has made the Brent crude oil price go up more than $115. This energy crisis has created massive panic in the Indian stock market today. Sensex crashed down 2,497 points. Nifty fell down 776 points and is at 23,002. Investors lost nearly 12 lakh crore in a single session today. Indian rupees slumped down to historic low of 93.10 per US dollar. Oil sensitive sectors like paints, aviation and auto faced heavy selling. Indian VIX spiked up 17% to 21.93. The banking sector also went through a very bad session today. HDFC Bank's share dropped 5%. Its chairman, Atanu Chakraborty, resigned today, citing governance issues. And not to forget, the FIIs are constantly on a selling spree. Till today, till 19th March, the FIIs have sold out nearly $5 billion worth of shares. Banks, insurance companies, financial services, these are the sectors they are selling the most. There's one more reason. The US Federal Reserve held interest rates steady at 3.5% to 3.75%, signaling only one rate cut for the year 2026, which further dented the risk appetite. The Fed showed rising concern about the increased energy crisis prices. They are worried about a second inflation, which means American investors are more preferring to stay within the US bonds. They can earn predictable returns by being invested in the US government bonds only. They want to avoid the risks of emerging markets like India. And it is not only restricted in India. The impact of the West Asia war, I mean the US-Israel-Iran war, the whole world is getting the heat. Take Euro for instance. ING is a leading Dutch bank. It has downgraded its forecast for the Eurozone. Eurozone is made up of 20 European countries. These 20 countries use Euro as their currency. And these countries are expected to grow at just only 0.9% this year. This is a fall from the earlier prediction of 1.2%. And the reason is the energy shocks and the supply disruption. Look at the Gulf economies. They are suffering too. Goldman Sachs is predicting Qatar and Kuwait's GDP could plunge by 14%. UAE 5%, Saudi Arabia 3%. So you can see this war is affecting all the economies and its GDP growth. A new assessment says this war could undo the trade deals between India and US. The gains from the recent trade pacts could be offset entirely. That's what makes this war so